Okay, let's talk about the Kenyan market and what's driving the market at the moment. Volumes have been very thin, jitters about the impact of Europe on Kenya, and inflationary worries just persist.
Well, that could all be summed up. The key driver in the market right now is fear. The Kenya shilling has become probably the de facto indicator for that everybody's looking at, and it probably the closer it comes to 100, the more fearful that everybody gets, because for one, there's been quite some erosion for foreign investors in helping in supporting the market, and everybody else, of course, picks it up in terms of. Others look at it in terms of devaluation and the expected loss of purchasing power. You can look at it from the terms of squeezing margins for companies based that have international supply chains. So the whole thing just plays out to, comes down to, what is the outlook,
and obviously worsening issues though is the depreciating shilling. We're seeing it trading above 96 shillings at the moment. It's even breached the 97 shillings 20 level, and we're told that the CBK will enter the market through reverse repos. But there's a pressure now that's mounting to say monetary policy is not working. It's time for the Treasury to step in. What is it that the Treasury could do to support the shilling?
Well, in my view, I don't think I'll say monetary policy is not working. I think this was probably a result of monetary policy to begin with. So it's just reverse what monetary policy has been. Instead of focusing on money supply, they should focus more on interest rates, and perhaps that will give them a better indicator of where money supply ought to be. So that they, I know right now they're still focusing on economic growth. I think they now should focus more strongly, probably even discard the whole notion of supporting economic growth, and just focus on money stability. And in which case, then Treasury's role in all this could be to ease pressure on CBK by cutting expenditure, so that and the budget deficit, which has been huge. If they're able to do that, then there'll be less pressure for providing money supply at low interest rates, and therefore everything will go back to sustainable levels.
All right, let's take a look at what's happening on the equity side. Safaricom today gained just above 1.5%, coming in at 3 shillings 25. So this is the level we've seen Safaricom trading at in general. When we've seen it lower, it was quite worrisome. Is it clawing its way back? Is it stabilizing? Could we see further price growth for Safaricom?
Yes, I imagine we could, and perhaps one of the biggest reasons being that obviously it's been a growing company, and you've seen the price retarding. So more and more the market price is approaching where book value is, and of course there's some indication that given levels of profitability, that it probably is undervalued. So with that in the back of the mind, the market obviously want to take a position. It's a good stock. It plays in the whole market. Everybody perhaps at one level or another is a customer of Safaricom, and therefore it's got a good market. All its competition has thrown everything but the sink at it. We've got free calls here and there, but still they still maintain market leadership. So the data market segment is coming up well. So I mean, it's got a good outlook, and therefore seems like a good buy. And remember, it was one of the first stocks that that got punished when the market started sliding. And I think it hit the bottom faster than everybody else. So it's a good stock to look at.
All right, CNG gaining 7.8%. What's going on here? Because we have seen another company in the same sector, not quite as expansive as CNG in terms of automotives and engineering support, but we have seen some problems at CMC. So you got a sense that things were not really well within the automotives and car sector. But what's working in their favor?
I think, first of all, to understand car in general, I think they ought to discard the car part. They are very little, very little in terms of automotive, perhaps just motorcycles. Most of it is engineering, construction, equipment. That's where the biggest market is. There are suppliers of Cummins and similar products. So the other thing to take into account is that car in general are about to announce their full year ends in September 30th. So we are close to that. Then you wait for reporting period. They probably report in January. I think the market is probably thinking that they're oversold. Right. Has been largely ignored stock because has been illiquid. But after the bonus issue, that brings it a bit more, gives it a bit more liquidity. And the expansive business, they're more than just Kenya. So it gives a little bit of geographical diversification as well.